going to go through tonight is what are our options in order to generate income? What can we do to generate active, passive, and residual income? So it's just a discussion on probability. What is the likelihood of something that we're doing going to actually make us money medium term to long term? My name's Andrew Squilari. I'm a digital asset strategist. Didn't go to university for that. That's just a school of hard knocks and experience and learning on the run. You can't go and study what I've studied over the last 6 years. You've got to live it, breathe it, and learn from many, many multiple trainers and organizations. I'm a Daxi customer. I do love the Daxi platform, and I'm a Daxi coin hodler. So for those that don't know much about hodling, it's someone that holds onto their coins and only sells them when they absolutely need to sell them, or they find a better investment to sell their coins into. I'm not a financial advisor. I don't offer trading advice or any other sort of advice. All this content today is all about education, teaching you how about what's happening with cryptocurrency and how you can find the answers that you're looking for. Do your own due diligence. Make sure you consult a financial advisor and a tax accountant to make sure you're in the right structure. If they don't have crypto, then it's pointless asking their advice because they've only got an opinion and they have no idea what you're looking at, and they'll only give you sort of a bum steer about what cryptocurrency is about because they don't know what you're looking to do, but making sure that you're correctly structured. So I have high expectations when you do get involved with crypto. You understand it to a level that you're confident that you will make some very good capital gains. Now, what we're going to go through tonight is what are some of our options to generate income. So number one is property, commercial, residential, and agricultural. Of course, we've got the shares, individual shares, so buying individual company shares. We've got bonds, government bonds, and we've got indexes, so buying into indexes as well. That's all part of the share market. We've got precious metals, of course, that's gold, silver, and platinum, and a few other people do use other metals as well. We've got cash management, which is self-managed super funds and mutual funds. And the last one, of course, is the one that I love the most, is cryptocurrency. So we're going to go through these few different options. So what I'd love you to do, if you want to make a comment, please put it in the chat. And if you think there's something I can add to this PowerPoint, please put that into the chat as well tonight, because I'd love to hear your opinions on this, because I think this is an area where we can really expand on. So we'll go for number one, property. Now, it's got possible growth potential here. So there's lots of different types of properties: commercial, residential, and agricultural. At the moment, we're seeing some really big moves because of a population shift in residential and rural residential as well. There's a lot of price action for rural residential, people wanting that the self-sustainability living. So rural residential has really been quite solid, as well as residential outside of the major cities. We've got low interest rates right now, of course, at 2.6%, low LVR, so you can actually borrow a lot more money according to your income as well. That's stable but slow growth in the property market for many decades now. Since 1982, I think, was our last big property crash we had in Australia. So we've had really good solid growth since then. And of course, you can do some residual income or passive income generation out of property as well, because of rent that you're getting. So some of the positives about property. So if you think there's any other positives that we can put into that list, please put them in the chat. I'd really love to hear them. Now, unfortunately, there's a few more negatives, in my opinion, about properties, which I just remembered another one. So at the moment, I believe we're at the top of the trend. We are definitely at the high end of a cycle. And we normally have a 7-year cycle, so we're at the top end of the high part of that cycle. The government is tightening monetary policy around property, so there are going to be some changes with that. We've got higher lender requirements. Even though they've got a low LVR, qualifying for a loan nowadays is really quite hard. You have to tick every single box a few times in order to fulfill the bank's requirement to get money. The biggest thing I see with the property market is lower job security. People's jobs are at risk and they change pretty quickly. If you're working for the government in any way, shape or form, or a large multinational company, happy days, you're pretty secure. But if you're working for an entrepreneurially based business or a small to medium sized business, then your job security is very, very risky. There's less jobs evident and there's of course, there's a property bubble forming. So we can see what's going on there. Lease instability. So that's really quite harsh in the commercial world. We've seen a lot of the big banks offloading a lot of their commercial real estate because they know that the tenanting of commercial property is very risky at the moment because, of course, most of their commercial real estate is rented by small to medium businesses, and they are really suffering right now across the globe, but especially in Australia as well. And of course, residential is tied up with people are moving and also lower job security. So residential leasing instability is pretty high. Agriculture, I see, is a huge part of this. A lot of international companies buying agricultural properties in Australia way overpriced because they have really no idea of the income potential of property. So the price they're paying to the income is able to be generated off that particular land. There's a lot of inequity in that. So we really are struggling with that. And of course, the last thing is no liquidity if you have no equity. So if you don't have equity in that property, you can't access any of the cash. And if you do want to access the cash, you got to sell the entire property 100% and get out of the market totally. What I'd love to get a bit of feedback on is how long do you feel it would take to double your portfolio? If you put money into if you put money into property, so on average, if you bought a $500,000 property and you had a 90% lend with all the bells and whistles and insurances and stuff like that, you have to spend 110 grand roughly to get that property in the first. Of course, every year after that, there's about $24,000 worth of payments plus insurance and rates and stuff like that. So add that onto the 110. How long do you think it would take you? Just put it in the chat. Just have a guess how long the money that you put in plus the extra bits and pieces with the income that is having, how quickly do you think it would take you to double? Not the value of the property, because that's very different, but double the amount that you actually have invested in that property. Yeah, 15 years, that's pretty close in my opinion. It's not growing that high. Top of the cycle. So if you're to buy a property today, we're going to wait a long time in real estate to do it. And my personal opinions is probably closer to that 15 years myself. So I think it's going to take a long time to what you put into that property initially, plus the maintaining loan every year, considering most properties are going into negative equity as well. So that's a bit of a problem with price revaluations happening in the near future as well. Now the share market's a bit different, Oh, hang on, a bit wrong. So we've got some really positives in the share market. We've got a very mature market. Like, it's been around for a really long time. We've got short-term positive trend over the last 12 months or so since the March event last year. We've had a really good growth in Australia of the share market. In the UK hasn't performed at all, and the American market's gone through the roof. So every market's been different, all depending on the monetary policy of the country that is being managed. So the share market is really affected by monetary policy. And of course, you can do some leverage trading with the share market as well. So instead of just buying and selling one share, you can do leverage trading. It's very, very risky if you don't know what you're doing. And everyone in the crypto world understands a bit about the dangers of leverage trading in crypto because it's very volatile. There's some shares that don't go up and down that much. So leverage trading is a lot safer if you do that. Some of the negatives, we're at the top of the trend. Well, we are at the top. The long as the governments are printing lots of money, there's a lot more money going into the share market. They are doing a tightening monetary policy. So they are sort of looking at slowing down the economy by not putting as much money into the economy. we're prone to manipulation. We all know that the big institutional fund managers do manipulate the market. They've been doing it forever, and they do it in a way to take out the money of the inexperienced investors. So that's pretty sad for people who want to get involved with the share market themselves, but the big manipulators can adjust prices, and rumors and innuendo through the share market are spectacular with ripping money out of everyday investors. And of course, we have a very unstable global economy now. A lot of big companies, their share price compared to their income is very, very faked at the moment. So you've got to understand that the price of a share does not relate to the profit of that company anymore. All it is now is to do is perception of value and a very shiny marketing policy. If you had 100 grand and you're going to either look after that yourself or get a fund manager to look after your share market, how long do you think it would take to double your portfolio, either personally or having someone to do it for you? You know, that's a really good question. 1 year, 2 year, 5 years, 10 years. I mean, we've got a really good share market right now, but hey, it corrected pretty hard last year in March. And I know a lot of people still haven't come back from that, especially in Australia. In America, they've done well, but we live in Australia. So what do you think it would take for you to double your portfolio if you were to get involved with shares right now? Me, I do not have an answer for this. It's way too risky for me to get involved with share market right now. I wouldn't go there. I don't think it'd take you forever to get your money back if you were to get involved with shares right now, myself personally. But there's some people out there that are a lot more experienced than me, and I don't like shares. So for me, I'm a very inexperienced investor in shares. So if you want to put your answers in the chat, that'd be fantastic. How long do you think it would take to double your portfolio? 1 year, 2 year, 5 years, or 10 years? Precious metals. I love precious metals. I think they're a fantastic store of value. Do I have many? A little bit, but not a lot, because it doesn't grow very much. You know, the problem is that it's a very mature market. You know, gold had its really big run from 1972 to 1982. It's just floated along at a very consistent price ever since. It's an uncertain trend, so it goes up and down. It hasn't really done anything since 1982, which is pretty sad. But, you know, it's slowly going up, but not greatly. It's a safe asset. It's really great safe asset. It's a good place to store your wealth. It's got some jewelry consumption. I mean, half of gold is used in half the gold mined is used in jewelry, especially through India, of course, and Asia. And silver's a lot of silver's used, platinum's used in industrial use as well. So there's some usage. As you find now, with the price of gold being a little bit higher, a lot more silver jewelry is being made. So of course the jewelry consumption is getting up, but also the production of silver goes down in a recession as well. And of course, in unstable economies, a lot of people used to dive into precious metals to protect their wealth. So of course, that's another area that a lot of people are looking at, gold and silver. As you can see, we've tokenized, turned precious metals into cryptocurrency. So there's a gold token, silver tokens, and platinum tokens available now. They're linked to the actual value of cryptocurrency, the metals that they represent. Some of the negatives around precious metals: slow growth, really slow. It moves up and down. It's quite manipulated. It's not transactional currency anymore. You can't actually use gold and silver as a medium to buy goods and services easily. Very difficult. Low usability outside of a store of value, except the use in jewelry and industrials. So it's not really used that very commonly anymore. It was quite popular before 1972, but not in the modern age. And it's an infinite resource. It is infinite. As the prices go up, mines open up, they dig more out of the ground, they put it back in the market, and the cycle goes round and round. When the market goes down, when the prices go down, the mines shut up shop and no one mines it because no one wants it. So the more they want it, the more they mine. Now, I'm not too sure who here has got some precious metals. But how long do you think it would take to double your portfolio if you did have precious metals? I've had silver for a few years. It's up about 30% in 3 years. I think it'd be hold my breath a long time for it to go double. You know, if it goes double in 10 years, I'll be really surprised. But everyone's got their own opinion, but I'd love to see you write in the chat what you feel precious metals going to do in the next 1 year, 2 year, 5 years, 10 years. You had 100 grand, you had it all in gold, silver, and platinum. How quickly would it get up to that $100,000 profit? Now, cash management's another really big area in Australia, especially in the UK as well. But Australia, it's huge, a couple $1 trillion industry in Australia. There's a lot of money in superannuation in Australia. The government's got their greedy little eyes on that money because they'd love to take it and spend it on, I don't know, helicopter flights to barbecues. I don't know what they're going to spend it on, but they want to spend it on something. But we've had a long-term positive trend with supers. It's not spectacular growth, but it's a long-term positive trend. A few little glitches back in 2008, 2012, but overall we've had a good trend. Don't need any experience with managed funds and superannuations unless you've got a self-managed super fund, because that's a very, very different thing altogether. But you don't need, you just got to sign the papers when you get a job, and some manager with a government fund or an industry fund will look after your money, and it's easy to enter the market because it's all part of your initial job application. It's a bit harder if you've got your own company, if you have to set up yourself and get someone to manage it for you, usually by the recommendation of your accountant. Some of the negatives, in my opinion, it's very slow growth. ASICs demand that it doesn't go any more than 12%. I've seen companies that have offered more than that, and they get instructed not to pay any more than 12 to 15% per year. So very slow growth with these big superannuations and mutual funds. They have high fees. If you have a self-managed super fund, it's going to cost you about $2 grand a year to manage it. And if you have a managed fund, it costs you about the same, but you don't notice it because instead of them paying you 10%, you're paying fees on that. They pay you 4% or less, and the fees are absorbed in that profit. No control of your funds. You can't tell a fund manager where to put your money. They look after it. They do everything they want for it. They can do it anywhere. They can put it into, you know, they're not buying property with it. They buy companies in companies that manage properties like Lend Lease. You buy shares in Lend Lease, so technically you own property, but not really. It's just a share of a property management company. You have low access to your funds, or no access to your funds until you retire. So there's no real liquidity there for you. Just put it in there and off you go. So again, how long would it take for you to double your portfolio if you were to have someone look after your super or someone look after your wealth? How long do you think it'd take you to double your investment? A long time. And you really get some leverage when they've been in there for 20 to 30 years. Then it starts to jump because the value, the amount of money's there, but it's not going to double anytime soon. So for me, maybe it might double in 15 to 20 years, more like 20. But, you know, it's not a very good performer, in my opinion. Put in the chat, how long do you think that would double? If you had 200 grand in super now, how long do you think it would take for you to have $400,000 in your super? So I'd love to hear what you got to say. And my favorite, of course, cryptocurrency. I've been involved with crypto for 6 years. I've seen some fantastic people get involved with crypto and done very, very well. And I've seen some gamblers get involved with crypto and literally lose it all, and their reputation and their money and everything. But, you know, for people that are hold on for dear life, this is where to go. So we have a very immature market. So, of course, that means there's a lot of growth potential. We haven't been around a long time, so not a lot of people involved, but more people are getting involved with cryptocurrency. We're really at the start of a long-term growth cycle. This is a thing to remember. As much as the industry's been around for 13 years, we're at the start of a long-term, very positive growth cycle. And I've explained that in other webinars. I'm not going to go through it tonight. A long-term positive trend, so we're actually going into a very positive trend of now. We've got global trading, so there's no really restrictions for people that want to trade cryptocurrencies. You can trade in any country on the planet right now, living in Australia. If you want to buy and sell crypto, you can do it from anywhere you like, on any exchange you like, globally. The trading doesn't stop. You know, ASICs, the ASX, the New York Stock Exchange, the FTSE, they all only trade for 6 hours a day in their own respective time zones. Whereas crypto, 7 days a week, 24 hours a day. So if you want to trade crypto or buy cryptocurrency, you can do it any time of day or night that you choose and what you're available. So it does not stop, not for Christmas, not for Boxing Day, because different cultures stop and go, but crypto doesn't. We've got high usability. So there's a lot more companies now getting involved with cryptocurrency, allowing us to use our cryptocurrency to live on and do everyday purchases, especially with the larger payment providers. It's fast, easy, fast, and cheap transfers. Very simple to send your cryptocurrency around the world. We've got mutual fund adoption. So a lot of the larger institutional size mutual funds are now heavily getting involved with cryptocurrency to hedge against inflation and to see that this thing called cryptocurrency is somewhere that they can get some really big capital gains compared to the 4 previous options that we've talked about already. The payment provider adoption is really hitting in now. Visa, MasterCard, PayPal, Alipay, Facebook, they're all getting involved with cryptocurrency. Amazon the other day said they're really serious about getting involved with crypto too. So payment providers, so you using your cryptocurrency to buy goods and services is really going to be a very big growth area, which means more people want to get involved with crypto, higher the prices. Of course, mass adoption is starting, hasn't really started. A lot of people have cryptocurrency. I think about 25% of Aussies have cryptocurrency, but not enough to make wealth. A lot of people had a bit of a flutter, put $100 in, or $200, $1,000, and that's not wealth creation money. That's just giving it a bit of a go because it's a bit of a gamble. But it's not a gamble anymore because the biggest institutions in the world are all moving into crypto. So we've got global economic instability. This is where people used to run into gold, silver, and precious metals, but now they're running into crypto because they're finding it easier to get involved with cryptocurrency. And also countries are getting involved now because of global economic instability. Countries like El Salvador, Mexico, Panama, Brazil, South Korea, Japan, Canada, France, they're all moving into cryptocurrency one way, shape, or form. And even China has got their own cryptocurrency now, which is going to protect them against what's happening around the world. Of course, it's a finite resource, which is the last one. This is where the real value in crypto comes from. It's a finite resource. Each currency that you've got, there's only one Bitcoin, there's only one Ethereum, there's only one Litecoin. There are many different coins, but you can't replicate that coin and make it less valuable as time goes on. So it is a finite resource, a true finite resource. Some of the negatives around cryptocurrency, of course, it's an immature market. When you have an immature market, people don't understand it. They don't really understand what's going on. It's got really high volatility right now. We're only sitting at $2.5 trillion industry, so it's easy for that to move up and down a couple $2 billion a day, and that reflects in the prices. So the prices do fluctuate a lot. We had about a 60% correction recently, and we're back up around 60% now. So we're not quite to the heights we were a few months ago, but the volatility is quite high, which just scare a lot of early investors and people that are uneducated. And that's what tonight's all about, just helping you understand that there are some different things in cryptocurrency compared to share market. You know, a 3% move in the share market, everyone's running and screaming, going, oh, the world's ending. 30%, most long-term hodlers go, oh, well, doesn't matter, it's crypto. Of course, tightening of regulation policies around the world. So a lot of countries now bringing in strong regulations around exchanges, which is really important for consumer protection and also making sure that companies are doing things ethically. Of course, all big markets are prone to manipulation. We do have a lot of manipulation in cryptocurrency. Big influencers around the world can whisper something good and the price goes up, and they shout something bad and the price goes down. So, of course, there's people with large amounts of crypto that do sell and buy at whim, which does influence the market. You do have to be very aware of your own personal internet security. This is a big thing. We've got some really good people in our community which help understand about that. But you have to really increase your personal security, making sure you understand the dangers of being hacked and people putting in bugs in your computer system so they can access your cryptocurrency accounts. And of course, the last thing I think is the most important one is low investor confidence. That's a really big negative. People need to understand what's going on with cryptocurrency before they buy any, and they need to understand all the positives and negatives to make sure they make an informed decision. And that's what you're here tonight doing. The question I've asked for all the other 4 areas is, how long do you think it would double your portfolio if you were to buy cryptocurrency? Even now, we've had a 60% increase over the last few weeks. There's some really big positive trends happening with the blockchain in Bitcoin, the blockchain in Ethereum. There's some great upgrades with Litecoin. All this adds for a lot more usability, and a lot more people are getting to understand that cryptocurrency is very green now. We're moving over to having the cleanest currency mechanism on the planet. So there's a lot of really good positives coming out. So if you were to put 100 grand into cryptocurrency, how long do you feel it would take for you to double that 100 grand? That's a really interesting question. So I think you need to think about that a bit more. So yeah, we've got 6 months and back and forward. So it's all over the place, but it's what your confidence level, for me, I reckon you'll double by Christmas time. That's my opinion. And that's what my expectation is with my account. So that's only another 5 months away, but we're on a hot run now, and it's going to continue because of all the good stuff that's happening in the market compared to what FUD, fear, uncertainty, and doubt was put out earlier this year. You really need to explore your options. So understand where you're at, how you're generating income, identify your risk profile. That's the number one thing you need to understand. If you're a high risk taker with low knowledge, or you like to know before you spend your money. So identify your risk profile, identify your goals. What are you hoping to achieve medium and long term with cryptocurrency? Because don't get involved with any form of investment if you want to make money tomorrow, because that's a gambler. We are looking at long-term investing. Identify your strategy. Diverse portfolios are all into one thing. Whatever you do, it's right for you, but you've got to make sure you stick to your strategy, and ask for knowledge. So reach out to people where they've got knowledge from, and you can go learn as well. So it's really important to get a coach and understand that you don't know what you need to know right now, but you've got to ask questions so that you can actually get fully informed about what strategies, what goals, and how you can manage your risk profile better. Working out, in your own opinion, what you're going to do is going to double your portfolio. We're not here to, we want to make money. We want to do stuff with money. So you want to make sure that you are looking at where is your time frame in your own mind about doubling your portfolio. And the thing I like the most about right now today, 15th of August 2021, disruptions create opportunities. There is no time on the planet before now as disruptive as we are living to every single day. So the bigger the disruption, the bigger the opportunity. So there is a big shift in culture. There's a big shift in finances. And whenever there's big disruptions, there's going to be some very, very lucrative opportunities available to people that are open to looking and learning about what's actually going on. We are entering the fun zone in the economy. We're entering the fun zone in humanity. There's some really big, exciting times along. So thank you very much for being open to learning. I'm really looking forward to helping you on your journey to learn more about crypto, more about strategies around cryptocurrency, successful investing, and how you can enter the market better. So thank you very much. Looking forward to catching you on a webinar into the future. Bye-bye.